morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, July 9th. Hope everybody had a great July 4th day and hopefully an extended week last weekend. Beautiful weather. Hope everybody is getting back into the groove of things. It is summer doldrums, so please be careful with price action here. And let's get right into it. This is last week's price action here on the 10-minute SPY chart. We had a big gap down due to non-farm payrolls. Market actually rallied higher into the close because there was some rumors out there that Fed's going to start extending QE3 now. But, you know, who knows? Again, just rumors. But we did have a real nice rally into the close. And, again, this is what I say, what I stress. When these markets gap up or gap down like that, there's very limited opportunity without taking on additional risk here. When you gap down this hard and you fall this hard, you got to be very cautious here when it comes to getting short in the hole, so to speak. So something to just keep an eye on. Average volume for this time of year, but well below current volume that we've had for the last few years back. So just keep an eye on volume. I really stress that. Even though volume has dropped dramatically the last few years, you could see when there's volume coming in, the markets how. Look at this, just this area on Friday when we had this oversold rally on that rumor. You could still see that volume is picking up no matter what, and you could see that buyers did step in and shorts got squeezed into the close. So something to really consider. We have earnings seasons kicking off today with Alcoa. The other two factors will be on Friday with JP Morgan and Wells Fargo. They will be watched closely and give you any kind of signs of any kind of turnaround on the banks. Now the banks have been crushed and decimated. So any positive news on the banks that is going to rally this market as well. Okay, basically positive responses to negative results will signal possibly the next trend, which would be higher. So you got to watch how market participants are playing it. If we get some negative results and they're buying into that, then you got to be cautious being short. You got to look to possibly buy this market going higher. And I'll get into that in a moment. So we do have some seasonal trends right now. Are still negative for the first 3 weeks of July. Right now, this week, next week, and then it starts picking up. We usually get some buying come in the last week of July, going, and then we start turning positive into August, and then they start to rally with of course, some additional pullback. So just something to note on the seasonal side of things. We have light economic data this week, so I think it's going to be based on any kind of news. This market is news driven, as we know, so please use caution when it comes to trading, doing even intraday trading. Anything that Merkel says or anything coming out of Europe right now, the markets are just hindering on any type of news that the market reacts to, and price actions going back and forth and really making it hard for longs and the shorts. So just be cautious with that. It wouldn't get stubborn on any type of trade you're in, and something that might go against you and never really look back for the day. We do have a couple of things that I'm going to show you on the charts. Semis and the transports are lagging the S&P and the Russell. Now we do have some market divergence here. We need to see if the Russell's going to pick up the pace here for the transports and the semis. As you know, transports are one of the leaders, one of the sectors that we follow. Without the transports and without semis, and even energy started lagging again, started rolling back. You're going to have it hard to sustain any type of rally. So please keep an eye on the semis, the transportation sector, Russell, and even energy. You know, you can look at crude. Big barometer here. So we really want to see a lot of these key sectors start moving along with the S&P. Without S&P, can't really pick up pace. Now Russell is actually holding in quite well. So we'll see. Maybe the Russell could be one of the leaders and start picking it up for a lot of the other sectors. So all right. So here's the 10-minute, as you can see. So price action here, we grinded higher and then we started breaking down again. And as you can see here, again here. Back up again. So really, price action is, I'd say, pretty dismal. For any type of swing trading is really a hard environment. So you'd want to be day trading. And again, limited positions. You're in the summer. You know, anything looks great, looks good. We have some good news coming out in volume. Then, yeah, I would say, you know, let's look to buy some stocks for the day. And hopefully we can hold them pretty much for the duration and then and look to get out. Because right now, building a position into weakness, I say it's okay. But where do you go from here? Where do you go from the weakness? Is that's part of something that we want to. How far down do you go? Because markets can actually roll here and actually sell off pretty hard. I want to get right into the indicators. Now, as you can see here, I always use the bullish percent S&P, and again, we were talking about it when we were back down here, and we rallied back up again. We had a nice run. We had a nice 4 or 5 week run. We are still overbought here, and they're starting to roll over. And as you can see here, we're starting to roll back down again, which is healthy for the markets to roll back and digest any kind of negative news. Now, yeah, Friday is one day. I like to see if this market's actually going to roll and see how far do we roll. So this pullback is going to really be determined if we take out any main pivotal support areas. That's going to be key. Now, before I had left, the last morning call video, I showed you the NYMO, and I said, guys, watch for a pullback any day. And this was, I believe, on Monday or Tuesday, actually Tuesday. And I said we're nosebleed territory here. Look for a pullback in this market coming soon. And obviously Wednesday we were closed. Thursday we did have a little bit of a bump up, and then Friday, as you know, we dumped on Friday. And this is a very trusty indicator. I'd be looking for you guys definitely to be looking at this. And that is the end of day, okay? So you really can't get anything out of it intraday, but definitely for positioning yourself for the next day will give you a good bias of which way this market's headed. Now obviously market can rally early and then sell off at the end of the day and vice versa. So, but just use this indicator as saying, hey, we're getting overboard. I'm going to look to reduce my longs, or I'm not going to be looking to get long too much going into the next day. And now we're at 47 here. We're still overboard here. You can see here. See, we're still overboard. Look at this massive sell-off we had. I'd like to see the market roll back into this neutral area, -10, +10, and see where we can hold these moving averages at 15 to 200 here, and then S&P maybe come down a little bit more and then rally back up again. Then I'd like to see this market start to hook up, and then I would love to see look to start buying some stocks. Now, I wouldn't mind the market coming back way below here, getting into oversold territories either. I mean, that's something that we really want to pay attention to. So let's keep an eye on that. Now here's the S&P stocks above the 50-day moving average. Again, as you can see, guys, we're overboard here. So we're still overboard, and I think there's further downside in the S&P before the market moves higher. Okay, now we're still, as you can see, the S&P here, the line chart down below. We're at 1354. Now 1300 really is a line in the sand. I'm not going to tell you if we break 1300 in the S&P cash, I'm going to see 1260 in the market relatively soon. 1250, 1260. So 1300 is a big area. Now we're way away from that, 54 points. That doesn't mean, we've seen this happen before, how the S&P can sell off in 2 days and all of a sudden we're right there. Okay, so here's a couple of key other areas that I always talk about. Here's a bright spot, which I will say that Shanghai, and as you know, I mentioned before, Shanghai is closely watched because they buy a lot of commodities, and they usually rally before or sell off before. Usually, the S&P usually lags the Shanghai, so the Shanghai leads the S&P. So this is something interesting here, and I like to look at my ratio chart here, the Shanghai versus the S&P, the ratio chart. And if you can see here, we've actually hooked out of this downtrend line, and the stochastics right here at this 20, looking to hook back up again. Now, if we can hold this area here, there's a little double bottom, and start building momentum to the upside, I think that by this market, the Shanghai moving higher, and then S&P makes a couple of new lows and holds that 1300 area, and then Shanghai really gets momentum to the upside. I think this will be one of the barometers to say, hey, I think we're done going down, and we're going to be rallying into the end of the summer. So this is something that I want you guys to keep an eye on. What's dismal is the copper. And copper, as you know, Dr. Copper, big industrial metal, highly used in almost anything. So if copper is lagging, you're not going to get much of the markets as well. And as you can see here, the stochastics are overboard. But look at the ratio chart, copper versus S&P. There's not one sign, and I should have drew a line here for you guys. But you can take a look at this from here, go all the way down. We really need to break back up this area here, and copper needs to start holding this 20 period and then really start to move higher here. So this is really important to watch. Big barometer. And here's another interesting note that I really want to see here. We did not make new highs in the transports. Now, and also look at the ratio chart in transport. So we're really kind of stuck in this range. Now, we did have a nice move here. No question about it, right? I said, hey, watch this. We start breaking these new lows. I think the market's going to be in trouble. But yet, we actually held and we rallied up. Now, we're just stuck here in this range. Now, we want to see this ratio break back in this area here, this little double top area. Or I'd like to actually see if we could bull flag again back in here, get rid of this overbought reading, and then actually move higher. That's something that I would love to consider. I would love to see. So keep an eye on that. Very important. Again, another negative U.S. dollar. As you noticed, I showed you the U.S. dollar chart when we had this bull flag pattern. Now we're in this range, and we're breaking out of this range. Now, it could happen that we break out, we pierce it, and stops get elected, and all of a sudden we roll back down again. That's very possible. So, but again, stronger dollar, weaker market, weaker and weaker commodities. So, want to really be cautioned here. Okay, I'd like to see this market. I'd like to see this dollar take out the highs and then start to roll back down again. So, until we see signs of weakness again in the U.S. dollar, I think we got to use caution here in the markets being on the long side. So, really. These are the four key areas I look at: the NYMO, the dollar, copper, the transports, and the Shanghai. Very, very important. Big barometers, okay? Real quick, we're going to go look through the rest of the charts here. S&P, here's the diamonds, the Dow. Again, we had the down sell-off on Friday, but holding above all the averages. So still pretty bullish, I would say. Spiders, same thing. As you can see here, we actually rallied down and we rallied back up at the end of the day. So we did have some negative distribution days here Thursday and Friday, guys. So it's something to note. But again, we're overboard here a little bit. So a little bit of a pullback today, and then see where we go could be important. Now, the inverted head and shoulders I mentioned to you guys, we have a target here of 138.78. Now in the S&P cash, 1390 would be the area target. Again, still holding up well. We're still above our neckline. So we did sell off today on Friday, but still, guys, still a bullish pattern here. And look at this, the stochastics are looking to hook up. So again, we have a lot of mixed signals, but I'd say a lot more bullish signals that we could move higher once this little market pullback is over. Now, transportation sector here. See here, double top, same thing. These are the IYTs. This is the ETF for the transportation sector. Again, overboard a little bit. We did have some good volume come in. But I'd like to see this market hold even on a sideways consolidation pattern, and then have the transports break out. Then I think we have a real nice rally going into next week. But I'd like to see a little bit of a pullback, low volume, and then a rally. Okay, last chart, IWMs, and the IWM chart here. As you can see, how we broke out higher. The S&P. Did not. The transports absolutely did not. And then this is really kind of what I'm looking for. I want to watch this Russell, because now Russell has relative strength to the rest of the other indexes. I want to see the Russell and the transports start to break higher along with the semis. And then I think we might have some sort of a little more end of summer rally going into the fall. All right, guys. Have a great day, everybody. Sorry the video's a little bit long, but I wanted to get some key points out. I'll speak to you tomorrow. Take care.